can do. So when you know what your opponent can do, you'll be able to know what you yourself can do. So market makers are our opponents, are our enemies in this scenario. And unfortunately for us, they hold all the power. It's like a Russia-Ukraine thing. But this time, Russia has the power and Ukraine cannot do anything. So market makers, market makers are the ones that conduct every transaction on Forex market. When you hit a buy, when you hit a buy on GU, for example, the only person selling GU to you is the market makers, and not somebody from China, not somebody from Germany. It's the market makers. And these guys control the market. They have billions of dollars to control the market. A quick one. Do you know that it takes 10,000 lots to move the market by 1 pip? Anybody there? Hello?
Yeah,
Yeah.
yeah.
I'll be running that actually. That's the first time
All
I'll
right,
be
thank
running
you. So it takes 10,000 lots to move the market by 1 pip. That means if all of us in the Learning FS group takes a trade in a day, we might not actually have enough volume to move the market by 1 pip. So you should now know what it takes to move the market by 50 pips or 100 pips or 200 pips. So that is why as a retail trader, you don't move the market because your volume is very low. Even if you are trading a $100,000 account, your volume is low. So who are the people who fight against and what do? Well, the market makers, we hear it every day. It's just a name for those people that control the markets. This is what they do. They sit down, they give them billions of dollars and they trade. And what is their aim? Their aim is to take your money. Their aim is to take everything you have in the market. They are the sharks in the ocean. You are the tiny fishes. They are the hunters. You are the hunted. You have to understand that fact and put it in your head so you don't control the market. Now, how do they do it? The first thing they do, they induce traders to take positions. How? They show you a sell signal. They show you a sell signal. Going back to our retail trading, they show you a sell signal by allowing the 10 EMA to cross the 70 EMA that your guru has told you that used to work like magic. So the moment the 10 EMA cross your 70 EMA and you take a sell, you take a buy. That is what you mean by inducing traders to take a position. They give you a first position and they take the opposite. So when you take a first position, they move and your money is stuck and you're thinking, you're praying to God, hoping that God, let this just come back to my entry, but it will never come back because they've gone. Now, what else can they do? They create panic and fear. Because we trade with our money, and most of us will risk the last money we have to trade. The moment the market goes against us, we start to panic. We get scared. We don't know whether we should buy or we should sell. Sometimes you can buy a market, then you close it, then you sell it, you close it, you buy the same market. That same day, all this is because of what? Your emotions. And how do they do it? They make quick moves. Sometimes, I'm sure all of us are seeing it. You just see a very long hand, just spike down. And you're like wondering what's going on. And you quickly take a sell. And the next thing, the moment the candle closes, it goes back up and it never comes back. Spike candles, they throw a long spike. News release, like what we have tomorrow, NFP. Notice during NFP, initially they take a wrong direction. Then after, they go back to the true direction. I don't know if anybody has noticed this. If they are going to go down, you see the first go up, a long candle, then they start going down gradually.
What is the meaning of NFP?
NFP is a news event that comes out every first Friday of every month. And that is why non-farm payroll, and that is why the first week of every month is always choppy. You always get setups that look very good, and you enter, but it doesn't go anywhere. Who has noticed that this week? You see good setup, you enter, and it doesn't go anywhere. Hmm? How many people have noticed that this week?
Yes, I've noticed that, especially on EU.
Now, I want you to do something. Every first week in the month, you can go back to previous month, check the chart and see what they do. It's always choppy. Every first week of every month is always very choppy. So that is news release, and also you can see a lot of news comes out despite the market. When work started, it affected the markets. When coronavirus came out. I remember one day like that last year. I think it was during March. Every currency went down. Every currency went down, including Bitcoin. Everything went down during coronavirus. The next thing it was up. What else can they do? They eat the stock. Now this is their this one is their worst ammunition. Why? There's something most of us don't know. When you take a buy on your broker, your broker takes this quote and send it to the market makers. Then the market makers now activate your trade. So what this is telling you is for every trade you make, the market makers know your position. Now, another thing you should know is the market makers have a screen. They have a screen whereby they can see a range of stop losses for every broker. For example, now on the market maker's dashboard, it knows the range. It knows the range of trade, the range of stop loss. You can see it on the screen. I will look for a screenshot and share it on the group later where you see a market maker's dashboard. So, for example, if you are using Forex now, the market maker can see that okay, 50% of Forex traders have their stock within a range of 1.6067 and 1.6087. That's just a random quote, right? So they can see all your stop loss and they know where to hit, take you out. Are you following? They know where to hit, to take you out. So where are they limited? So have anybody wondered why we are trading EU, but let's say Euro USD. Now let's say the put of Euro USD is 1 point. Let me check the chart. I don't have an open chart here. Let's say just give me a minute. Let me check the chart so I can give you a real quote. So the price of 1 euro to 1 USD right now is 1.1081. You can see this on your trading platform, right? But in the real sense of it, when they are quoting currency, hello,
please, you is making
your
noise
mic?
now. People should mute your this thing now.
Please. So the price quote of every currency is quoted to 2 decimal place. For example, $1.99. Is that correct? $1.99. But you notice that when you're trading in 4 decimal places. So the last 2 decimal places that you're trading that can make you $1 million in the real world, it is actually nothing. Why? So there's one thing you have to understand. The market maker cannot move the market by 1,000 pips in a day. Why? If you move the market by 1,000 pips in a day, you destroy the economy of Europe and destroy the economy of America. You get me? So there is a limit by which the market maker can move the market, which is monitored by IMF, International Monetary Fund. Hello, please can you mute your mic? So, and that is where the idea of ADR comes in, average daily range. So, for example, EU now, the worst EU can move in a day. EU cannot move more than 150 pips in a day. But the way the market is now moved now depends on the market makers. IMF tells you cannot move more than 100 pips today. Note, right? Now, it is now down to the market maker, the guy that controls the money, to now say, okay, how do I now move the market this morning? Do I first go to the low, then come back to the high, or do I just go up straight away? Are you with me? Now, that is the work of the market makers, but they are limited. Then, another thing is, as much money as they have all the money in the world, which means that when they take a position, after a while, they have to take out their money and reinvest it. And that is why you have levels. For example, the market move level 1, it consolidates. That is the market makers taking a move. That consolidation is them taking out their profits and inducing new traders into taking position where they can steal their money. So what did they do? Like I said, they entice traders to take positions. They flash you that they are going long when they are going short. And when you go short, they trap you. And once they trap you, they take your money. They go up. They can go up for the next 2 days. And your money is trapped. So when are the traps being set the most? That is where we are going to go to now. Where do they like setting the traps? Now, beginning of the season, that's beginning of the first quarter. You know, the year is divided into 4 quarters, right? The first quarter, second quarter, third quarter, and the fourth quarter. So the beginning of the first quarter, the beginning of the second quarter, they are always setting traps because that is where they open their trade and that's when they close their trade. Now, beginning of the week, Sunday, Monday. How many of you use philosophical resistance? That black line that draws from Sunday, from open of the market to close of the market on Friday. How many people use that line or that tool? Okay, if you don't use it, I want you to try and do something now. I want you to draw, you go to your 4 hours chart, then
this guy will meet this now. He's making noise. He's by the roadside.
So who is that? Let me mute the person from here. So where was I? Okay, I want you to do something. Do a study. I want you to draw, you pick out the first 2 4-hour candle every week. Pick out the first 2 4-hour candle every week. You draw a line from the high, draw a line like a horizontal line, the high and the low. You draw it from the first 4-hour candle. You draw the high and you draw the low. Extend the line to the end of the week. You would notice most times, the moment they open the market on Monday, they take a first move to one direction. Then that same day, they reverse the market and go the opposite direction. At times, they go this way for 2 days. Then you get your midweek reversal. Then they go back up. For example, if they open the market and they give a trap by going up, hold on, let me see if I can do some drawing. So let's say this is our line now. This is the high and the low of the first 4-hour candle of the week. the first 4 hour candle. Let's say this is it. Now, first 4 hour candle. This is what they do most times. The moment they open on Monday morning, they come like this. Then when they come like this, what do? They come down 1, 2, and something like this. Then they create a low. Then the next day, they come back and they do what? They go like this. 1, 2. At times they could go up, at times they could close here. So if you draw this line, you will start seeing things like this, where they create a false move, the reverse, they come the opposite way, they create a low of the week. This will now be the low of the week. Low of the week. This will be your high of the week. High of the week. So most times, when you get this first move, this first hello, sorry about that. I don't know what happened, but I'm back. So let's go back to where we are. So please, who is that? Who is that?
Vikram, I thought you say you will mute the person. Please, can you mute everybody who is not mute
Yeah,
yet, please?
I've missed the person. I think I've missed the person. Okay, can we go back? So let me draw what I was explaining before. So this is they call it psychological support and resistance. So you have the start of the market like this, right? A first move like this, then they come 1, 2, 3. Now, some guys will rush to take this buy on Monday morning, and when they buy, maybe when they buy here, because of a cross in the MA, they get trapped up here, and they are trapped for the week. So when the market makes this move and they go back, all you need to do is, this is your low of the week. They could break it, but they could come here and
of key ports, including Mariupol.
who is that now?
Essentially, it's cut off from power, from heat.
So this is your psychological resistance, and this is your weekly that's your weekly trend. So like I was trying to explain, they use it to take wrong position. They create, okay, we've gone over this. Sorry about that. So we are here. So beginning of the week. So I just explained the Sunday Monday move to you, where they trap traders on Monday and they reverse. Now beginning of the day, that is where you get your stop ons. That's where you get your stop ons in the every day. You get your stop on, then you get your MIW and your reversal. The beginning of the section, that is your London session and a New York session. They create traps too. So all these are the periods where you have to really, really be careful of taking trades, because why? You might end up on the wrong side if you are not careful. So what tools do the dealer and brokers have? So like I was explaining before, when the market makers are out to get you, the first one tool they can use, they can recruit. What is recruiting? This is when maybe you take a buy at a point, but it doesn't open at that point. It goes maybe 1 pip or 2 pips higher or lower, then opens. That is the broker recruiting for you. If you call them, they will tell you, sorry, when you place the trade, market was volatile. So it was when the market could open, it opened. That is what they mean by recruiting. So let's say you take a trade at this point. Now, this is where you take your entry. They could come up and enter here for you, or they could come down here and enter here for you. That's what they mean by requoting. They cheat you of like 2 pips or 3 pips. Now, trigger or stops in a given price range, which I've explained. I will send a screenshot on the group much later. They can see this person stubborn. So they can see everybody's stop loss. They know where majority of the stop loss is. That is why they can target you, take out your stop loss. Or if you have a pending order, they can target you and take your pending order. Okay, I will send the PDF later to the group. Then they vary the spread. I'm sure everybody sees this. You see, there are sometimes where the spread are actually widening. They widen, they close, they do a sort of sense with the spread. No problem. They throw a spike to stop everybody out, like they did a few days ago. They throw a long spike, they take out your stop loss and they move. Then this, they target traders who are in margin. They can see what's on your account. Either you like it or not, the market maker can see your balance. They can see your stop losses. They can see everything you have. But the truth is, as a retail trader, you know nothing about them. That is why they get to you. So once you understand all this, you should know that you're not in the guessing game. You're in the reactive game. You don't guess for the market maker, you react. Okay, what are they do? They take this step, I follow them. They take this step, I follow them. And when you don't understand their step, you do what? You hold on till you understand it. So that's that about market maker. Now let me now talk about the trader psychology. Trader psychology. Before I go ahead, let me take questions for 2 minutes on this part I've talked about. So if you have any question you want to ask, you can kindly unmute yourself and throw it out in the next 5 minutes because I'm on a tight time frame here. So questions.
Please, I want to ask. You said we should be careful of trading New York section and London section. So,
No, I
which
didn't say
one is the
that.
best? Maybe I didn't hear you right.
I didn't say be careful of trading New York and London session. I said the market makers, they set trap at the beginning and the end of the session. Now let me give you an illustration. Where is my pencil to here? Let me give an illustration. So just hold on.
Okay.
Where is my pencil to? Where is my pencil to? Okay, so you know the way we trade Asian section, you have consolidation,
breakout,
and then
stop
when
on.
you have something like this, right? And you have something like this. Now, sorry, forget the drawing. It's not perfect. Now, this is your Asian section, right? This is your Asian section. Now, this place is mostly happened at the beginning of the Euro session. This is a trap. Are you with me? This is a trap. Now, most times, you get first leg during the Europe section. Like you can get this leg during the Europe section, this leg during the New York session, right?
Yeah.
Okay. So they throw a trap here. Now they come, they trap you down again. They go at the end of the day, they end in the middle range. So this middle consolidation is a trap for the next day. So beginning of this section, they trap. End of New York, they trap. Are you with me?
Yeah.
So that if you check your chart, you will see, the chart is about patterns. Chart is about patterns. So you will see all these patterns where they trap in the morning, they trap in the night. It's very common on the chart, right? So have I answered your question?
Yeah, I'm okay.
Yeah. Any other question, please? Any other question? Okay, so let's talk a little about the traders psychology. Well, as a trader, the first thing you have to understand is if you are going to trade in the forex market, either you take it from me or not, you are going to trade is like you're in the ocean. And what happens in the ocean? The big fishes eat the small fishes. There is nothing like I'm a baby, I'm just learning to swim. If you don't know how to swim, you stay in your mother's den. The moment you go out in the big ocean, you get eaten. There is no two words about it. So there is nothing like I am a learner in trading. If you are a learner, you go with your money into the market, they'll take it off. But not nobody started as a professional, all started as a learner. So as a learner, please, who is this? Oh, who is mute, mute. Please hold on. I'm trying to mute everybody. Okay, fine. So as someone that is learning, how do you become a professional? First of all, forget everything you learned as a retail trader. That's number one. Take in this BTMM because BTMM is the opposite side of retail trading. So it's either you are doing retail trading or it's either you are with Ukraine or you are with Russia. It's either you are with Ukraine or you are with Russia. You cannot be in the middle. So it's either you are retailing or you are beating the market makers. So if you are retailing, you are fighting against the market makers. If you are trading the market makers, then you are swimming with the market makers. So the first thing is forget everything about your retail trading. Support and resistance, trend line, all those patterns, patterns. Just forget about it. Second, if you are just learning this, stick to a maximum of 6 pairs. Stick to the major pairs. Don't go after 20 pairs. Stick with, in fact, start with 2 pairs or 3 pairs. Go into the market, draw your levels, go back in time, draw your levels and see how they react. If you become a master of 2 pairs, it's enough to make you a millionaire. Take it or leave it. The founder of BTMM, I can tell you only trades EU and GU. If you don't believe me, go and Google, go to Instagram and search for Steve Mario and look at chat. Stick to 2 pairs. That's number two. Number three, have a written rules. Write it down. If this does not happen, I will not do this. If there is no second leg, no entry. If my setups are not met, no entry. Market is always there. Because you miss 400 pips today, doesn't mean you will not get 400 pips tomorrow. Doesn't mean you will not still get 400 pips next week. So there's nothing like crushing. The market is always there. It has been there before they gave back to me. It has been there before they gave back to my father self, and it will be there after I go. And I can assure you, the pattern that has happened 2010 is what is still happening now. If you don't believe me, go and check. So everything you need to know is there. The cheat code is there for you in the market. Just go back in history and learn. Then another thing, your setups. If you are just learning, know your setups. Look for only 1 or 2 setups every day in the market. When you master those 2 setups or 1 setup, you can expand your horizon. Let me give you an example. These days, I'm getting stuck on one thing, waiting for um H4 to pull back to 50 mm, 50 MA. That's what I just tend to look for these days. This week I've not really seen much and I didn't really trade. So when I know that once I see H4 pulling back to the 50 MA and I get a good entry, I can put my life on it and I will get my profit. You will not get it every day, but the day you get it, it will pay you for the day you did not trade. So trading is 80% waiting, 20% trading. You have to understand and know the time. Like I said, I see a lot of people, you come around 8 p.m. in the night and say this market is ready. I look at the chart, I look at the message and I just laugh. I'm not mocking you, no. But the market cannot be ready at 8 p.m. in the night. The market cannot be ready at night. Even if it's ready, I will not take it. Why? Because I know that there will not be volume to move that market. So I would rather just wait till the next day. If I miss it, I miss it. It's better than me entering the market and I get trapped. Because like this, like you can see here, trap happens at the beginning and at the end of the day, whether you like it or not, it happens. So you have to be conscious of your time, conscious of the time you take your trades. Then know your setups. Just stick to 1 or 2 setups, 3 or 4 pairs. Stick to it. Look at that chart. Go back in history, study it, and you will get it. BTMM is not hard. It's just a hard set rules that you have to follow. So the most thing you have to learn is discipline. Discipline yourself to be able to wait on the market. Wait on the market. The market can move 80 pips and it's not for you. There's no problem. Just be patient. But you know that once you get your setup, you've killed it. So that's, as a trader, you have to be patient. Protect your capital. Stick to few pairs. Stick to few setups. And once you get what you're looking for, you get it. Then there is no success without hard work. I will not lie to you. No success without hard work. Please, who is talking? So you have to go back to 1 year chart. Go back and start drawing your levels. Go back and see how the price reacts when you're at the MAs. Another important thing, your TDI. No setup is ready when your TDI is not ready. So you have to pay attention to these things. And with time, give yourself time. Most importantly, you will get it. It's not hard. It's not hard. It's just time and patience. So at this point, I would like to end my lecture. But before then, I want to take questions. Question on market maker psychology, questions on trader psychology, or if you need maybe advice, or just let me know. Let me know if you have questions. So you can unmute yourself now and ask whatever question you want to ask. Questions. Well, I will take it that nobody has questions, right? I'll take it like nobody has questions.
Thank you. Thank you for your time, sir.
So if there are no
Thank you,
questions,
sir.
don't forget what the market makers can do. And don't forget what the market makers can see. They can see your margin, they can see your stop loss, they know where you are in the market, they can take you out. So don't anticipate, don't plan for the market makers. Let the market makers plan and you follow. So at this point, I would like to end my lecture. And I want to thank Dupo for giving me the opportunity to take this lecture. I am really, really grateful. And I also appreciate everybody for listening to me. I'm also a learner like you. So I appreciate everything. Thank you very much.
Thank you, sir.
Yeah.
Thank you so much for your time. Thank you. Thank
Yeah.
you.
Welcome.
Okay. Okay. I actually would like to say one or two things before we move to the next section. I hope Mr. Okay, I think he's there. He's there. All right. Pius, can you please meet everybody?
Let me mute myself.
No, please kindly mute yourself, please, everybody. Okay. Okay, Pius is not working. All right, this is it, Bar. Let's take this market maker stuff as your lecturer, just to establish one or 2 points that Vikram has made. He has actually explained to us what market makers can do in the market. This is actually the first thing you need to know as a trader, what these people can do in the market. Now, understanding this is actually very, very important. Sorry, my environment is quite noisy. Sorry. So now let's put it in this scenario. Let's consider that we have what was it called? We have you are a student, or we are all students. Like, okay, let's assume we are all students of the market, and let's consider the market makers, our professors, our lecturers in this school of Forex. Now, the truth is that, the truth is this. The truth is this. It is, okay, I'm sorry. Okay. So, as I was saying, the truth is this. It is more like, you as a student, you have limited things you can do, right? And in the sense that you as a student, you read for exam, like you study your chart, you prepare for exam, but your everything, your success depends on your lecturer. Even if you what was it called? Even if you know what you are doing, and probably offend, let's put it that in a scenario that whereby your lecturer is just not happy with you, you will fail regardless of even if you pass or you are good at the course or not. The lecturer will make sure that you don't just graduate. Because I have a friend, when I was in school, I think one of the top lecturers, she's a lady. So because of our closeness, she actually opened up to me. One of the top lecturers has been wooing her for a while, and she couldn't yield to it. And funny enough, she didn't graduate. Why? Because the lecturer delayed her. You understand? She didn't pass the lecturer's course because she didn't submit herself to the lecturer. Now, it is just like that in this scenario. You have to understand that you must do everything it takes to look into the perspective of the lecturer, which are the market makers, except unless you will fail as a trader. So you are the student and you are sitting for exams. You're put at the back of your mind that regardless of how much you've studied for that exam, there's high probability you don't succeed. Why? Because if your lecturer do not pass, hello, Pius. Hello.
Yeah, I'm here.
Kindly co-host me, please, and mute other people on the group.
Okay.
So I think we understand what I'm trying to say. Now, if you as a student write your exam, the end result will be you submitting it to the lecturer. And if the lecturer decides to fail you, that means there's nothing you can do. If you don't if your script is not in accordance to what the lecturer wants, there's nothing you can do than you to fail the exam. So it is exactly like that when it comes to you, a retail trader, and the market maker. You have to put at the back of your mind that the market makers are the lecturer, and we as the retail trader are the students. And this trading thing is our what? Exams. Regardless of how you prepare, you will still have to bring your what? Your script to the market makers to mark. Now, this is what the market makers do. They check your script, they see what you've done, and they just cancel it, even if you are right, and give you 0. Now, if you don't understand what they want, how they want it, their tricks, you will only score 0 in the market. Like Vikram said, that's why you enter trade and you'll be like, okay, I'm sure this trade is going to go my way. And all of a sudden, they reverse the trade against you. You begin to ask yourself question, what have I done? Who have I wronged? But it's not about what you've done or who you've wronged. It's about the people that are controlling the market. I don't know if you understand, but that is exactly what the market psychology is. Now, you actually have to understand this. The moment you understand the concept of these people, how they trade, and you can trade alongside with them, which is exactly what we've been trying to preach all along, you will make success in the market. Right? All right. Don't worry, we establish more of these points when we get to the second section, which is risk management. We'll talk more about these things, probably in details. I don't know, Mr. Michael, are you around? Kindly unmute yourself. Is he around? Okay. Okay, I've asked you to unmute yourself, Mr. Michael. Hello, Mr. Michael, can you hear me?
Hello, boss.
Yeah, good evening. How are you doing today?
I'm fine. I'm good. And you?
Yeah, I'm doing well also. So you have the floor. We are going to take the risk management segment together. Sorry, my voice is not
What?
really clear.
You? I
So
thought we were saying no problem.
so I would actually like you to start then I will join you along the line.
Okay.
All right. You
Good
have the
evening,
floor.
everyone.
Sorry, Pius, please kindly host Mr. Michael. Thank you.
Yeah, good evening, everyone, if you can hear me.
Yeah, good evening.
Yeah, basically, I just, although this is Ogadipo's assignment, but me, I'm just to put a kind of brush up to it. But nevertheless, I will just talk about risk management. And I hope everyone can hear me. Okay. Now, there is one thing you have to know about trading. Like Vikram said, it's either you are a retail trader or you join the market makers, meaning that you follow the trend of the market makers. Now, I think one of the reasons why many of us are not taking this BTMM course serious, maybe because of the price. Honestly speaking, we have to be frank with ourselves. I was chatting up somebody and we were talking about BTMM far back then. And he said he's going to, I even went recently to go and check his price, around $350. I've taken courses of $1,000 and even more. Now, and I discovered one thing. I think what you don't pay for, you will not value that much. That is one. Now, when it comes to risk management, which is very, very important in trading, that is where the issue of your stop loss comes in when you are trading. The natural saying, they will ask you to risk ratio 1 to 1, ratio 1 to 2, you risk in percentage. Some people will even tell you that you must not risk more than 1% of your account, which is good. But for me as a person, I've learned my lessons in a very hard way. When I started trading, I was not using stop losses. So I discovered that even there are times the trade will go my way, and suddenly the trade will just come back, leave me 100 pips, still going, and I'll be praying, oh God, bring this market back. My wife will come to check me. My body will be seriously hot. I will not eat. There are times I will not sleep, even in the night. I'll be looking at my phone. When I'm going on the road driving, I'll be looking at my phone. I'm 100 pips down. And then I used to over leverage my account. At times with an account of $2,500, you will see me putting 17 lot sizes on one lot. I will do martingale layer that this market will come down. This market will come down. Now, market makers are playing on your psychology. That market will not come down. So at the end of the day, I will now console myself after I've blown the account. Risk management, very important. I will just share my screen now, and I will talk about 7 deadly sins in Forex trading. Let me just share my screen with you. I hope we can all hear me. Oh. Hello.
I can hear you.
Yeah, can you all
Can
see
hear
my
you.
can you see my screen?
Yeah,
Can
we can
see
see your screen and we can also hear you.
Okay. The 7 deadly sins of trading. We are going to look at it together. Number 1, it has to do with lust. You know, many of us, we think, most especially we that are Christians, we think when you begin to lust after a woman, that is only lust. No.
only lost.
Lust is often associated with sexuality. That is what many people believe. But there are another kind of lust, and that is the lust for money and power at all cost. Now, I'm going to apply it to trading. An obsession with making money can push you to take bigger and bigger risk. You will put yourself in when there is no good reasons for doing that. So it can also push you to cross some of the boundaries and principles that you have set for yourself. Now, remember, once you cross those lines, those principles, those rules, there is no turning back. And how does lust come to play in trading Forex? When you are into Forex with, number 1, with the motion that getting rich quick, there is a problem. Then number 2, when the time you ought to acquire more knowledge, acquire more skills. If you are only after money, let them throw chart. Let me follow the chart and make money. Then there is a problem. And what is the cure? You have to replace your desire for money with a desire to learn. Now, let me also tell you something about BTMM that I discovered recently. Well, by the grace of God, I've gotten some new things even about BTMM because I had to sit down with that. And apart from that, I had to take more videos. I had to learn and learn that even there are times that when you understand your BTMM, you know some things have to come into play. That is an advanced BTMM I'm talking about. Oh, that you don't even need to count levels. You will naturally know your levels. You will know the direction of the market. And with some of these EMAs, you can know the level and you will know what the market makers are going to do next. That's one. Number 2, let's look at, okay, let me complete that. It says, as you become more skilled and experienced trader, you will earn more money. So focus on building your skills and gaining experience, not the potential reward of skills and experience. It's like dreaming about buying a Ferrari before you even had a job. you have to get a job first before thinking of, and you have to get money. You have to save of buying Ferrari. But if you are thinking of Ferrari without getting a job, there is a misplacement of priority. Number 2, gluttony. Now, when we talk about gluttony, this is very, very common. Now, most people can't undo sudden wealth. So traders are not different. Once a trader achieves financial success, he will be tempted to overdodge in everything, like food, like some of those things. Now they will have to think of their upgraded life. And another thing, when I come to that, I'm also going to explain that. Now, so when some of these things happens to a trader, for example, you have a bad month or a bad year, panic will set in, frustration will set in, inaction will set in. You can even be out of trade for a very long time. So when gluttony sets in, and how can I connect it with trading? I can't say gluttony is greed because I'm still coming to look at greed. But let's look at the cure so that it will better explain. As you earn more money, save a higher percentage of what you take home. What is it trying to say? So when you make profit, try and save some part so that even when your capital is down, you have something to use to replace it. Don't spend everything that you earn. Now, let's go to the third one, which I'm more concerned about, is greed. Now, when we talk about greed, it is okay for somebody to get a bigger house, a nice car, a private house or kids. It is also good to have a dream of getting around like $10 million in your account. But when you are greedy with trades, number one, you will over leverage your account. And what is over leveraging? For example, you have an $100 account and you are placing a lot size of around 0.20. You are over leveraging the account. Your $1 account, even if you have a very short trade and you want to test that trade, the best thing to do is to put in 0.2. That is the best thing. Now, when you place a trade and that trade is going your way, you can now add few positions. You don't add to a losing trade. You add to a winning trade. So, and when you want to enter a trade with a small account, you have to put in the smallest of the lot sizes first. So, and when the trade is going your way, you can now add to it better than adding to a losing trade, thinking the trade will go your way. Another thing is when you are making profit too, there is what we call break even. Very, very important. That is one of the rules. And I do tell people, if you have a good capital and you pick a trade, let's say you have around $1,000 and you pick around 0.10 in 5 places, 5 positions. Once the trade has moved like 50 pips and your target is 100 pips, I will advise that you close like 2 positions or 3. Lock your profit. At least bring your stop loss to your open position. So allow the remaining 2 or 3 positions to run a bit. And once you get to 70 pips, close another position. Now you can now move your stop loss from that entry point to maybe like 10 pips or 20 pips. Allow it to run to your destination so that you will not lose anything. At the end of the day, you have been able to capture like 2-3 positions at 50 pips, 1 position at 70 pips, and the main target at your 100 pips. That is how to go about it. Now, the cure for greed. Now, let's look at the cure for greed. You have to revisit what you really love about trading. It is the process of scanning through, can you imagine, 200 charts to find out one that speaks to you. Meaning that one thing we must understand is that some of those charts you place on your phone or your system, they speak back at you. Allow your chart to speak to you. Don't speak to your chart. That is what I see on some of our some of the chats we place on our community. You don't allow your chat to speak to you, but you speak to your chat, and it is very dangerous. It's also a sign of greed. So another thing is that you don't rush to just nail a trade. Allow the trade to play out. Allow it to play out. Then I just quickly, because of time, I move to this one. It is called slot. Now, when you are talking about slot has let me see how I can put it. Now, many of the traders who run into trouble because they do more complaining than learning. That is what I understand about slot. When you complain about everything. You don't learn. For example, from some of the things, even I thought I know some things about trading psychology, but the way Vikram puts the thing, I've gained like one or two things. We must be ready to learn. One thing happened one day and I was shocked. Aslem, I think Aslem is there. Honestly speaking, he has been a wonderful person to me. He might not know, because I thought I came into the community before him. I could remember that I still looked at our chat. There was a particular time he sent me a chat when he just came in newly, and he was asking some questions. I thought there was a particular night I asked him to pick a particular trade then, that this trade will give him $100. I told him when I was getting out of that. But I discovered he took his time. He studied those charts. So we had just like an argument. There was a time we had an argument. And do you know that he called me on the phone? I was surprised, trying to explain his points. And I was happy. At all costs, we must be ready to improve ourselves, and we must be ready to study our charts. Now, I've not gone deep into risk management. I'm just trying to pick out some of these things. Also, rot. When you pick a trade and that trade is not going your way, number one, a lot of things will set in. And that's why, as for me, if you are picking, let's say, an ID 50 trade on H4, this is what I do. I leave my stop loss around 50 pips because I'm targeting 100, 150 pips. That is the way I trade it. I leave my stop loss around 50 pips. I'm targeting 100, 150 pips. So when I target 100 pips, that is ratio 1 to 2. I'm risking 1 to get 2. I'm risking 1 to get 3. That is how I trade it. But immediately when it comes to hit my stop loss, what do? I leave that trade. I'm no longer trading for that day. I'll just come out of the trade. I'll go and relax my mind. Go and enjoy yourself, sing. Losing a trade is not the end of life. Once rot sets in, the next thing you discover is that you begin to pick a revenge trade. And that's how you are going to blow your account. You have to risk what you can lose. And what is the cure for rot? You have to clean up your mess. You walk away from your trading station. Don't trade until you have your anger out of your system. So then the sixth one is talking about envy. I will tell you a secret today, and I will also try as much as possible, maybe during this retreat, I will post something on our community group. You see, some of these people that you see online boasting and telling you they make this so amount, they flip this account to this so amount. The truth is, majority of them are liars. Now, I don't know whether it has happened to you, but I want somebody to bear me witness. Have you ever, you have placed a trade, you're on profit. Maybe you're on like $300-$400 profit. And you close your MT4. And you come back to open your MT4. And you will see your $400 profit turning to 400,000. If it has happened to you, can you just signify? Can anybody just, if you have seen it happen?
Several times, sir.
Thank you. You know that even it has gotten to a time that I screenshotted that. So if I place it on Facebook,
You will think I'm making a whole lot of money. That is just network error. That's a network problem. That somebody will take the peak 0.05. And if you look at it, how many days, how many weeks, and you will discover 0.05 is giving him over $5,000. How many pips with 0.05? So some of those things, if you begin to envy some of these people and say, they are doing it, I want to do it, my friend, you are ready to lose. And I discovered one thing too. Most of them, I have followed, well, it's not by boasting. I have followed majority of the big boys when it comes to trading. I have them, I enter their DM, we chat. When they lose, they don't tell you. Many of them enter into serious losses. I have one. I don't, maybe if you are familiar with, there is this guy, Coach Raphael. The guy, at least the guy is a very good trader, good trader. Raphael will make $200,000 maybe in 4 or 5 hours. When we were discussing, he sent me some. Raphael will lose $200,000 in 1 hour. How is that?
Okay.
Raphael will lose $200,000 in 1 hour. He's an aggressive trader. So if you go and copy some of these people, they only share their results. They don't share what they are passing through. So there is no need for competition. There is no need for envy. Don't envy anybody. What is the cure for envy? Be nice. If you know a trader who is absolutely killing it, you should make them friends, not enemies. Don't. There is one of my boys who I just saw his result. He was posting his result on Facebook. I now chatted him up. I said, my Alpha, what strategy are you making use of? He said price action. I said, wow, I have series of courses on price action. That have you heard about BTMN? He said, no. I have an ebook. I sent it to him. I said, go and read. This will also help you. Yes, I know. At least yesterday alone, he made $5,500 on gold. He sold gold yesterday and he made $5,500. And I told him, I said, you are doing fine. That even presently now, the way you are making profit now, you are making a good profit, even more than me now. But yet, I still want to learn from you. Let's bring knowledge together. I love to learn from people. But I had to introduce him to BTMM. So, and as I was drawing my charts, I was sending those charts to him. He picked some trade yesterday night. And I told him, this is how the trade will, this is the direction of the trade. Later, he came to confess, yes, he's making money. But I know that I'm not making up to him. So I have to also make him as friends. And we share knowledge together. We share a lot of things together. I had to show him the way. So you have to be nice. Then we have to make friends with people. When somebody is making it, don't become an enemy of that person. Make friends with people. The last one is talking about pride. I have to link it with also envy. Now, when you talk about pride, when number one, I would break it into 2 or 3. When you drop a chart and somebody is trying to correct you, even if that person is wrong, the best thing to do is to keep quiet, let others talk. Don't just come up and say, I'm very sure, I wait until. No, it is pride when you don't take correction, even if that person is wrong. Because from whatsoever the person is saying, you will still see a mark of sense. That's just the truth. So I don't throw away every opinion. When I place a chart, I've placed a chart on the group. It didn't go my way because I'm not a market maker. Market maker might decide, let's hunt people and then before we move in that direction. So, and we have to be polite. Also, when people criticize our work, honestly speaking, I believe when you criticize my work, you are motivating me, because there are charts there that people don't even criticize at all. So when you criticize what I'm doing, then that means that you have interest in what I'm doing, and I'm happy. We should learn to receive it with an open mind. Then, or some of us, you have entered a trade and then you are placing that chart. For somebody like me, I will never comment on that chart, like, because that was not the way Mr. Dipo brought us up. So you have entered a trade and you are now sending the chart. Help me look at it. I've done it before. At least Justice Ibrahim could testify. I've done it before. I've sent him chart. He didn't even talk. Yes, I blew that account that time, but I learned my lesson. You don't pick a trade, then you now display the chart and say, help me look at it in this direction, or you even if it is going your way. I think you should show your chart before entering the market. That is the way I understand it. Then another thing about pride is that somebody is saying something, whether he's saying rubbish, I know I'm going to learn one or two things from it. So I should not just tell the person to shut up, or I should just behave as if I know more than the person. In Forex trading, nobody is a professional. It is only when you carry money come out that we know that you are a professional. So we are learning every day. And as we are learning, market makers also, they are developing themselves too. So they are trying to make it from people's money. So the cure for pride, instead of cheering every big trade you make, celebrate small losses. Losses is part of this game. You can make losses, but don't, for example, when you pick like 7 trades and you win 4 and you lose 3, you are still a winner. But acknowledge the fact that you have made some mistakes. Don't give excuses. Go back to those charts. Don't celebrate those ones that you have won. Go back to those ones that you lost. Look at the reason why you made losses on those trades. Write out your mistakes, then forge ahead. That will make you a better trader. And before I bring everything to a close and end the lecture, I will advise, if you are looking at higher time frame, for example, like Vikram said, you want to pick ID 50 trade, the best stop loss you use is 50 pips, because you are targeting 100, 150, 200 pips. When you are picking what's it called now? You are just picking a normal, maybe you are from a pullback trade, or you are picking a level trade. You are picking on 1 hour, one level. So you come to 15 minutes to check your hand. I will advise that your stop loss should be around 25 pips if you are targeting 50 pips. That is the best thing to do. With that alone, then you look at your account. How much am I? When you have an $100 account, you should be able to risk $10 out of that account. You are risking $10 to get $20. You are risking $10 to get $15. But when you have $100 account and you are risking $50, it can cause IBP. So then don't always allow your losses to get at you. Risk what you can lose. Once I pick a trade, I count it as losses. I zero my mind on it, that this one, if it goes my direction, fine. If it doesn't go, so when it goes my direction, I enjoy. When it doesn't go my direction, I have zeroed my mind from the beginning of picking that trade. So trading is not do or die, because it has happened to me. Somebody sent me something, I watched it. Somebody placed a trade. He was wearing suit. I don't know whether you have watched it. And this guy was shivering till he collapsed in front of the TV. His friend had to come and pet him. Why? Because the trade was not going his direction. So, and many people, they have committed suicide, all because we cannot manage risk. So I think with that, I might not have really delved much into it. So Gadipo will do much, but I want these 7 key things. I want us to work on it. Thank you very much. I don't know whether there are questions.
Thank you so much. Yeah, before questions, I would actually like to add something, so we will just answer the questions together. Right? Thank you so much, Mr. Mike. I know say we get great people inside for group, like big people. Thank you so much for the insight, and thank you for taking your time to create a slide or a template for us to go through. Well, I feel Mr. Mike and Vikran has done justice to the two topics, but especially this risk management, I would like to see one or two things. I don't know if you guys can hear me well because I think I have code or so. I can't speak louder than this.
Your voice is okay.
Oh, all right. All right. Okay, this is it, but you know, I used to say, like Mr. Mike just said also, that once it comes to trading, leave your religious belief out of it once you enter it. Now, this is what I'm trying to say. I know we are Nigerians, and a whole lot of us are religious people, like non-religious in that quote, but then we know God. Let me put it that way. Now, this is what you should do, or this is what you should put into consideration. I used to say it over and over again. There was a time in my life that once I enter trade and the trade is going against me, my mind is always like big, as if my heart wants to leave my chest, or I'm always depressed and the likes like that. Yeah, it is not easy to lose, right? But once I lose trade now, it is more of, okay, I lose trade. So what next? Once I'm losing trade and the trade is not going my way, at a point in time, I have to close it. I don't wait till it blows my account. I don't wait till it ruin my profit margin. There are times I can give it an extra break. At times I don't, depending on the structure I'm having. But then I've come to understand that God looks at you when you are losing trade and he smiles. And when you keep begging him, he will just turn a deaf ear. Why? Because right before you enter any trade, go and put it at the back of your mind. Go and check yourself over and over again. There's something in your mind that is telling you that this thing is not in line with your principles. So this thing is not in line with your principles. So, but you say no, you want to enter. Then you enter. At the point in time again, you'll be telling you that this thing, close this thing. No, this thing is not going your way. But you say no, you still wait. Now, when you see that the thing has gone a whole way, it has gone far away from you, then you start calling God to help you. Then God will smile and say, I've helped you actually, but you didn't listen to me. When you were supposed to close at minimal loss, you didn't listen. When the thing was at $50 minus, I told you to close, but you didn't listen. When it's at $60, I told you to close, you didn't listen. Even when it's at $100, I told you to close, you didn't listen. Now it is at minus 300 and something dollars. Now you are begging me to reverse the market. So who is foolish now? Now you have to actually put something at the back of your mind. As a trader, you need to know how to control the fear of you losing money. It is inevitable as a trader. Go and look at any person's success story. I'm more of an active person on Twitter, and I follow a whole lot of traders. And one thing I see is all of them just uploading their results, their success results. I caught 500 pips today. I caught 1,000 pips today. $1,000 today. I actually, personally, as a person, I don't really care about how much you make. I care about, because anybody can screenshot stuff and put it online. I care more about how much you lose. How do you lose? And when you lose, do you tell us about it? Even if it's not all, do you come out and say, okay, I made a loss here because of so and so? Even if you don't do it every time. Now, you should understand that there's no 100% in Forex trading. That's why if you go watch those 4 videos Steve Marrow first made, those is free courses, he will tell you that BTMM give you a leverage of 80% in the market, 80 to 90%. Then that 10% to 20% should tell you that losses are inevitable in the market. You have to put that at the back of your mind. Losses are inevitable in the market. Now, there are different kinds of losses. There are losses that are good losses, and there are losses that you are just so stupid to have those losses. Ask me why. How? How is when you as a trader over leverage your accounts. Now we go back to the point Mr. Mike made. You want to make your generational wealth within days. You want to make your generational wealth within hours. You want to make $1,000 from $100 within just 2-3 hours. Who are you deceiving? Yourself or God? Because later on you will still call God to come and help you. Now this is it. I don't know, but I've been trying to put some real life experience into trading. Personally, I'm a civil engineer. That was what I did in school. And from experiences, I've come to understand that the word build, which a whole lot of forex trader uses today, used today rather. Okay, I want to build $100 to $1,000 to $1 million, which is good. I want to build so and so. They want to build their account. But as a civil engineer, I've come to appreciate the word build of late. You know why? Because as a civil engineer, if we are to use the word build, it means we always put a whole lot of things into perspective. We have a lot of engineers here, they will agree with me. You have to put, before pre-construction stage, you have to put a whole lot of things into perspective. Construction stage, a whole lot of things into perspective. Post-construction stage, a whole lot of things into perspective. One, pre-construction stage. We understand that building means process. To build means process. So it's not what you can rush. You can't say you want to build a 14-story building and you want to build it within an hour, within 2 hours, within a day, within a week. That is the mistake we make as forex traders. You have an $100 and you want to make your generational wealth you raise it to $500 and you feel you are on top of the world. You want to make your generational wealth. You blow that up. It's a process. I don't have money to trade. I don't have money to trade. When you finally put that $50 into your account, go and check it. Most of the time you blow your account. What made you blow that account? It is greed. It is the fact that you can't follow the process of you building. Like I was saying, we have pre-construction stage. Pre-construction stage is just before you enter your trades. What are the conditions you have to put in place? You see architects coming around, drawing a blueprint, structural engineering coming around, drawing structural drawings, giving you structural details for stability of the building. You see QS coming around, quantizing your work, telling you how much you are going to spend before you even start the work. You see different people coming around and working together. What are the conditions for you to pick the trades? These are pre-construction stage. How much am I going to make out of this trade? How much do I intend to make out of this account at the very long run? These things you put in place. You sit down and say, okay, I want to enter a trade. This is the extent to which I can go. This is the limit to which I must go. If this trade I'm going to take is not going my way at a certain point, I have to close the trade. Why am I picking this trade? All these questions are questions you should answer. But you know what? When you're about picking that trade, when you're about entering that construction phase of the process, what do? Then you sit down and ignore that conscience telling you that this setup is not matching this condition. This setup is not doing this setup is not doing that. I've also come to understand that most of the trade, me myself personally lose. Most of the trades I lose, it is when I have my conscience doubting that setup. I lose the trade most of the time. Oh, I'm not too sure of this, but it looks cool. Let me just enter. And then the conscience will be like, it's not there. This is not what you used to pick. Well, for me, let me make quick $10. Let me make quick $50. Let me make quick $100. Then I enter the trade. And all of a sudden, I'm losing quick $50. I'm losing quick $100. Now, you have to put your pre-construction stage well. You have to organize yourself. You have to know the kind of trades you want to enter. The condition for 1 hour setup, 1 hour pullback to the 50 is different from the one of 4 hours. The structure for 1 hour is different from the one of 4 hours. The condition for peak formation trades is different from the condition of 1 hour setup. All these things you have to put together. 1 hour peak formation condition is different from 4 hours. It's different from 1 day rather. All these things you have to put together, but you tend to ignore them. You tend to carry one for one. Set your pre-construction stage very well. And how do you sell this pre-construction stage very well? Is by you learning. Definitely right from the beginning, I've told you, you can confluence whatever strategy you think you know to join BTMM. But I will tell you personally that the only strategy I use presently without confluencing anything is BTMM, and BTMM is giving me the results. Now, the question now is, if BTMM is giving me the results and some other people that use purely BTMM the result, why are you finding it difficult? The pre-construction stage is very, very important. Very, very important. You sit down there, you go through the content, the courses, and you feel that is the end of the world. That's the beginning of your success story. Oh, come on. I'm really sorry. I'm telling you now that maybe that's the beginning of your failure. But that's just this simple truth. The course won't transform you. You are to transform yourself using the course. Sit down, go back, watch each video, mark chart tirelessly. Do these things repeatedly, over and over again. Suspend trading if you see you are not consistent. I suspend trading when I lose trades. At times, I don't trade for 3 days. Just sit down and look at the condition of the market again. I see a lot of debate. Of late, I see debate on the group about BTMM. BTMM is not a template. Put that at the back of your mind. It's not a template. It is a method of trading. I won't even consider it strategy. It is more of understanding the market maker psychology, because this thing is not a template. It's not okay when it hits resistance level, it's pulled back. No. It is more of you understanding how the other people trade and how you can trade alongside with them, even despite their deception. That's why I told you from the start that the market structure happens most of the time, 80 to 90%. But we have the 20% time it is not happening. What do you do during this 20% time? Understand these things. Sit down and learn. You just need 20% of your energy to produce 80% of your results. But seriously, you've not even put an input of 1%. That's the reason why you're not seeing any results. You just need 20%. And the fact that you are not seeing results should tell you that you've not even put 10%, 1% you never put. These are the things you should look at. The pre-construction stage, very important. Because no work will be done on site without your blueprint, without the architectural blueprint. Oh, I will tell my clients, I'm not going to come to your site without you giving me your structural details. I'm not going to work on your site without me seeing your structural details. Oh, which kind of architect do you use? No. You can't use this kind of architect for this kind of job. Please contact a professional architect. Pre-construction stage, no blueprint, no construction. You don't have the blueprint yet. So sit down and draw one for yourself. Sit down and draw one for yourself. The blueprints, you need to learn. You come into the group. Why? Because a whole lot of us are finding it difficult to make money. Not all of us, but a good number of us. And if you are finding it difficult to make money, the funny and the most the most awkward thing I now come to understand is that you are coming with some strategies that it has not been working for you. And someone is telling you that you are coming with your own, is telling you that there's salvation at the cross. And you go to the cross, you want the cross to save you of sin. Abba, how did Jesus take one save you? No, it will not be possible. There are too much of load. So you can't be saved. Drop it first. You want to learn, you drop all you know. I don't know if you can hear me. You want to learn, you drop all you know. That is how it is done. Drop those strategies for now. Once you understand BTMM, then go ahead and look at the one that will suit you in confluencing it together. That is the way you learn. That was what I did. I dropped everything I know. Elliott wave, I can draw it for you. Fibonacci, support and resistance, breakout and risk test. I learned ICT, I learned supply and demand. I learned trend line. I learned a lot. But when I came across BTMM, I dropped these things for the main time of learning. I wanted to give BTMM a try. So I had to drop. That is what I do when I want to learn. You drop things you know first, then open yourself to learning. But you don't want to drop it, your old bag of sin. Then how do you want Jesus to save you? You can't be saved. BTM can't work for you. Drop it first, because BTMM is not the same concept. It's not the same thing you know in time past. It's a total different stuff. So drop it first. Learn the BTMM. Learn it to stupor. Learn it well. Then when you are done, go back and look at the ones that will work out for you. Like I said, you join this group because of your reason, because you want to make change in your trading life. Then drop those things that have not been working for you for a while, no? The coffee, once in there, just leave them alone for a while. Then learn what is working. Then when you are done, go back into that bag and check it out again. Which one will work for me when I join it with these things that is working? That is how you learn. I'm telling you, you are not seeing results. You are saying BTMM, it doesn't work. It is you. Sit down and think about it. If some people that took the same course with you are making money and you are not making money, then you are the problem. The same people on the group are making money and you are not making money. You are the problem. I purposely pointed out Peter just so it won't be as if I'm always talking about Vikram. I'm always talking about I'm always talking about Amsel. I'm always talking about Michael. I didn't talk about them today. I pointed out Peter Jasa Balumi. So you will know that he is not even up to 2 months on the group. is making money. So what is the question? He's a busy man, but then he's making money. So why are you not making? Your pre-construction stage is very important. Put your things, set your table right, create a blueprint for yourself. Pre-construction. Now let's go to construction. Now, when builders, structural engineers, architects, and the likes want to start construction, they come together and be like, okay, now we've created a blueprint and blah, 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 and blah. Let us start work. Now, at this particular point in time, is point you want to pick your trades. When you start work, the moment you don't follow the blueprint, you set for yourself, the standard you should follow. You have the occasion that happened at, is it Ikoyi or Lekki few months back? That story building that fell. You have the situation of synagogue church, the collapse of building. Should I keep mentioning examples for you? Because those are the equations, those are the answers, the solutions you get from not following your blueprint. Those are the repercussions you get for not following the standard you set for yourself. When you do substandard work, you get substandard results. Hey, come on. In construction, there are difficulties. In construction, there are setbacks. Definitely. In trading, there are setbacks. At times, you enter a trade, it doesn't go your way, close the trade. There are setbacks. Admire losses. Learn from it. There are okay. Hello? Hello, can you hear me?
Yeah, we can hear you.
Hello? Hello, can you hear me?
Continue, we can hear you.
We can hear
Can
you,
you hear
sir.
me?
Yes,
Yeah,
sir.
yeah,
Yes, sir.
Okay, so as I was saying, that is exactly how it works. So there are setbacks. I could remember at times when we cast, when we cast suspended floor, like upper floor, like decking in normal language. When you cast decking in construction, you wait 28 days before you remove the struts, those things the bamboo you use to hold them. You wait 28 days to tell you that this thing is processed. You don't rush it. You don't, the moment you remove it before 28 days, before the maturity, it might collapse. Wait, follow the normal step, or you want to jump products. You can't jump into it without following the process. When you cut losses, it is normal to cut losses. Close the trade and wait again for your setup. You can't use $100 to build $1 million in a day. If you are going to use it, consider it. $100 to $1 million. Look, you to do the ratios and look, know how many days you are going to use. But you want to use a week to build $100 to $3,000. It is risks. It is exercise in futility. Too much risks. $100, you are using 0.5. $100, yeah, you are using 0.1 and the trade is going against you. And you know your structure has broken and you still sat down in that trade. Are you out of your mind? These are the things you need to put in place. Now, I will tell you something you need to put at the back of your mind. I've said it earlier. When you want to enter trade, God speaks to you. and use your conscience to speak to you. Oh, don't enter that trade. That trade is not right enough. That trade is not ready for movement. You will know at the back of your mind, if you've done your pre-construction stage well, that before you start your construction, there are Lagos State regulatory body that will come and check up on you. Oh, you are not doing this thing well. Oh, God is telling you with your consciousness. I'll be with your conscience, rather. And he's telling you, look at this thing again. This thing is not right. Wait now. Wait, but you said no, you want to enter. Then you enter. Now, when you enter, he will still come back and tell you, why not close this trade at this particular loss? See, the way we blow our accounts, you go and think about it very well. That these things come back playing into your head. Close it at $10 minus. You say no. It is going to $20. Say you know go close on now. You say no. It will reverse. You have $100. It is minus 30. Close this thing. You still have $70. You can still build this thing back and make a whole lot of. You say no. Then at minus 50, you can't go they beg God. Say make God return the trade. God go to look you, go point out to you and say waka. She be able to tell you since you know answer me. I don't know if you get it. Construction stage, very important. Now, post-construction stage, which I actually noticed that a whole lot of people actually do. You don't come around and tell us about your losses. How about if you come around and tell us about your losses? People can point out where you actually make those mistakes. But no, you only want to show us your profit, like a whole lot of Forex traders do. Okay, I make $500 today. Oh, glory be to God. So what next? Are you going to give me part of that $500? No, so keep it to yourself. In fact, you didn't even tell me when you entered the trade. So keep your screenshots to yourself. But then you cut a loss of $20. It hits your stop loss. And you come around and say, this thing hits my stop loss. So I actually don't know the reason why. If you don't, I actually don't know the reason. That's if you don't know the reason. Then you come around and say, please, can you guys help me out so I won't make the same mistake next time? You learn from your failures. Failures are just failures, nothing more to it. It is we that attach something to failure. We attach depression to failure. We attach rejection to failure. We attach whatsoever thing you can attach to failure. But failure is just failure. It is a part of the process. You will fail 1,000 times. You load a 1K US dollars, you blow it, load another 1K. You failed before. Next one you are going to do, you will be more cautious. You will learn from the previous failure if you are open to learn from it. You load $10 account, you blow it, load another $10. If you learn from that previous failure, you will learn how not to blow this account because you have the right knowledge. And because you are open to learn. Post-construction stage, that is when you will see we call post-construction cleaners. We tell them to come around. We are done with this project. Can you see the house? It is beautiful, right? Come around. Let us see. Now I make now I make this profit. I make this loss. Now I do this, I do that. Okay, why did I make this profits? Why did this trade work for me here? These are the things we do in post-construction. We clean, we call cleaners to come and clean, come and carry all the instruments we use out before we hand over the project to our clients. There's nothing more to risk management than I've explained and than Mr. Michael has explained. I will repeat. If you are trading with small accounts, you have $50, $100 account. Put it at the back of your mind. Before you loaded that $50 account, you find it difficult to load. Now, don't use that $50 account to make $500 in a day or in 2 days. It takes weeks, it takes process. The first thing first for you to do is to protect your capital at all costs. Your capital is your lifeline in the market. Let me tell you how I do it. I try to encourage people to do it. Now, when I load my account, are you with me? Hello?
Yeah, we are with you.
Hello?
Hello, we are with you. We are with you.
Okay.
Yes, sir.
Now, when I load my account, the first thing I do is I ask myself this question. What's my plan? Now, the first thing I do is I protect my capital. $50, $100, $5. First thing first, if I'm using $10, the first thing first I'm looking at, I'm watching out for is my $5 I must not lose that $5. Why? Because when I lose that $5, before I can get another $5, it's difficult. So what I will do is I will use minimal lots to build that $5 back to $5, to build that $10 to back to $10 until I make sure I build that $10 back to $10 before I start using the normal lot I'm supposed to use for that account. I will be so careful that the trades that we will be picking, they will be high probability trades alone. That means I have to wait longer to pick my trades. Those are the things I will be doing. Now, why? Because your capital is your life in the market. You don't joke with it. Your capital is all you've got in the market. You must not joke with it. So protect it with your life. You have $100. I remember when I started with $100, one account with $100. And I was like, okay, I must not blow this $100. I wish to use a bigger lot size because of bigger account. But I was like, I must not lose this $100. Then I was trading $100 account with 0.03. And I was building. And when it got to about $75 profit, I was like, okay, I have leverage of extra $75. So I stopped focusing on my $100 capital because I have extra $75 I can trade with. Then I increased my lot. Then in space of 1 month plus, the account go to a profit of, if I'm not mistaken, to a profit of 1,400 and something, which is actually not bad for an $100 account. Imagine bigger account. If you were in one class like that, I took with about 100 people in the group, one free class like that I took. You would have seen my account, that $100 account I was talking about in particular. I told them that this $100 account is more of, I want to eat, I want to go out and the likes. Okay, yeah, Mr. Michael was there. And at the time I was showing them, it was still around plus 700 profits. But before I withdrew all my money away from it, it entered plus 1,300 and something, which is not bad for $100 account in almost 2 months, not even up to 2 months. 1 month plus. But you start from small. Not like you want to build that $100 to $1,000 in a week. It is you over risking the account. So let's assume, okay, you have a capital of $100. Just that's what you just have. You can load your account with $5,000. You can load your account with $10,000. You can load this with $2,500. You just have $100 capital. And from the example I gave you, making extra 1,300 from it, that's around, if I'm not mistaken, that's around over almost $600. Dividing it by, it definitely wasn't up to 2 months, but let's assume it was 2 months. Dividing by 2, that's like 300,000 each per month. 300,000 each per month for beginner with $100 account. Small, like say you raise your account small, no rush at all, depending on the setup though. It's enough, but you want to make that 300 in a week, in a day. What would you do with that? You see how I've said doing multiple profit margin, making millions on his account. You want to jump into the shoes of Ansel. You go for now. You don't get that kind of account. He grew himself to get to that kind of account. You see Mr. Michael talking about $5,000 profit, $2,500 profit. You won't jump into an issue. Here you no go sleep. You no go for. Go for now. You never reach that shoe. They are building it gradually, and they are building it like they are building it. What if you two start building? Regardless of how long it takes, you know you are making progress. That is the cocoa. You are making progress along that process line. So now at times when you see a construction site and you see that it is stopped, those are the times we face difficulty in construction. No more money for the client, or state government asks us to stop, or local government asks us to stop, or Omota is stopping the site. When you're having turbulent time in market, what do? Take a break, rest, reset your head, come back. That's what makes market sweet. Take it as a business. And they will tell you in business, you can't build it in a day. Don't ever take Forex as a Ponzi scheme. The moment you take it as that, you will blow your account, you will blow it again, and you blow it again. I see a lot of people over leveraging their accounts. And I'll be like, okay, good luck to you. That's what I see in the back of my mind. It's then screenshot of your result. And I'll be like, see, me personally, I don't really care about your results. You make $500 in a day, go come. You know why? When I see your result and I check your equity, and I see that your balance is around $100 and you are making $500, I'll be like, there is a day that is coming that they will take everything away from you. Why? Not because I want to curse you, because I know definitely that day will come when they will test your account. And that mistake you make, that you think is a success story of you making $500 on $100 account in a day, might turn around and not be what a success story. It might bite you. So think before you act. It is Forex. Forex is simple and interesting. Number one, you need to learn. Number two, you need to cut your clothes according to your size. $100 account, use appropriate, build the account first before you say you want to be risking anything. Build that small account first, multiply it. If it's $5 account, first multiply it to 10. So if any losses is going to come, it will only affect the extra 5, not your own capital. It is as simple as that. I pray God help us all. So any question from any source? Oh yeah, we can ask our questions. So
good evening.
Yeah, good evening. I'm so.
Yeah. I know a lot of people have talked about this risk management. It's very important that we know some certain things. There are some nuggets I wrote down. If you want to make it as a trader, there is only one way. You dig deep, you study hard, you focus on one trading method, track your trades in a trading journal, make constant tweaks, and do not listen to other people. And you should also note that when you are trading, you are trading against this forex trading is not a team sport. You are not competing with other traders. You are now competing with market makers. You are the one competing with yourself. And so you should know that as you are trading, it's a competition between yourself and yourself. So you should know what you are able to risk, what you are able to gain. And one important thing that I need many of us to understand in the house is this: the market, the trends of the market does not always go as it's not a straight line that once you enter into a trade and you have entered into profit, there might be reversals and stuff like that. So what I would advise is everybody that enters a trade, immediately your trade enters into profit. Once it enters into profit, just be trading your profits. You understand? Trail your profits, secure your capital first. That's the most important thing. Always try to secure your capital at all costs. So if you are willing to risk $10, for example, to get $30, then immediately you enter into a profit of $10. Lock your profits. Put your stop loss at that position, so that even if the market reverses and it comes back, it hits your stop loss, you can still enter the market again if you believe that the market is still going that way. So that way you are sure that your equity is growing. Many times I see a lot of I've just been seeing people drawing charts on the chart. You'll be drawing BTMM circle on an existing chart, and you anticipate that the market will go up, and you are already in positions already.
In the positions.
It's not done that way, because with that knowledge that you have, most times you can blow your account. And one thing I've come to realize again about this BTMM strategy is the fact that in the moment we are in a peak trade, for example, once you enter into a peak trade and that peak trade is confluencing with those guys that do, I think double bottom, or be what do they call that thing? Either double bottom or double top or something. Once the trade or the circle is looking like that, I've always noticed that the market makers will go above it, because they know that
Stop points, yeah.
the people who are doing BTMM and the people who are doing head and shoulders and then this thing, they have seen their pattern, and so they want to break the structure of the other people, so they will go and do a stop on. So most times we should be wary of those things, especially when we are confluencing, because when you confluence, you are using another strategy to interpret what you are seeing in the market, and sometimes it does not work. So I think that with proper just knowledge that I'm trading against myself and I'm following a particular pattern and I'm here to make money, then you make your this thing. Like Oga Michael said, don't be envious of anybody. Don't be envious of the fact that you just joined and you are not trading. Don't know. Study your chart, study hard, look deep, be an independent person. And by the time that for the past how many days now, I think I've been having people get into my DM and we've been chatting, and I quickly, I always notice something about the market, because I know that every time I'm also learning. When somebody sends me a chart, it gives me an opportunity for me to go back and look at those charts and see what the person is seeing. And I also know that many people in the group also have knowledge that I don't have. For example, somebody might have ICT. I don't know anything about ICT. Somebody might have Wyckoff. I know a little about Wyckoff. Somebody might know something about supply and demand. Those knowledge, they are good. But if you are trading with a particular strategy and it's working for you, then you don't need another strategy to complement. All you just need to do is to improve on that strategy. Um, just recently, I learned something about TDI. I know Ogadiba has been telling me to always use TDI, but I didn't take it serious until somebody opened my eyes to see it, and I've been learning it. I'm not even good at it yet, but I'm still learning. So every day we become better, we become good once we are able to develop a strategy. And for many of the people who are new in the group, I believe that this $1 if you check the group media, I think there's a document, the $100 challenge, be the $10, $5 challenge. You can use the template of the lot sizes for your account. The thing is not over leveraged, especially if you have a small account. It's not over leveraged. So I believe that with that, recently I have one account that is over $500, but yet I'm using 0.05, and I'm not thinking of increasing the lot size. Even if it gets to $1,000, I'm not thinking of increasing the lot size now. So if we can discipline ourselves about lot sizes, I've seen somebody use 0.1 in a $300 account. It's good though. You increase your position, you increase your account, but the moment the market goes against you, you lose more money. You lose more money. So whatever our guy is telling us here is very important. I've learned some things from Vikram this evening. I've even written them down. My journal is with me. I've written down this thing. And anytime you enter into a trade, I think many of us, we don't put things down. If you are entering a trade, for example, I'm entering a peak trade, just write it down. Why did you enter that trade? I entered this trade on 25th of March or 25th of February, so and so time. The reason why I entered because the trade was at 800 EMA in 4 hours or in weekly, and I know that it will retrace, or my TDI is saying this. That's why I entered. And when you enter profit, once you have what is it called, a profit margin that you are comfortable with, move your stop loss into the trade so that you at most, if the trade decides to go against you, you will just hit your stop loss and your profit will still be, your capital will still be intact. I pray God will help us as a group. I think this knowledge is timely. Just like my Oga Michael said, um, never put more positions in a losing trade, especially when the market is going. You just think that it's a stop hunt and you are putting more positions. It is bad for this thing. That's a key thing I've learned. Once you enter into a trade and it's a losing trade, and they are doing is reversal, is doing a stop or a stop hunt, whatever it is, don't put more position anticipating that the positions will come back. Just like just last week when gold was going up, and you just believe that they are supposed to come down, they are supposed to come down. So once you see a candle go up, you will go and put positions there so that when it's coming down, no. But if you are in profit, it's always good for you to can add more positions. Like he said, that's the idea of this strategy. It will make you rich. It will make you, once you are consistent, your account will grow. Your account will become better, and you yourself, you know that you are growing as an individual, and learn to discipline yourself. I think that's important. Just discipline yourself. Before you enter a trade, just know how much you are willing to lose. If I'm willing to lose $5, $10 from my account, and I'm going to gain this amount, then you can go ahead and go into the trade. And once you see a losing trade, Ogadiko says God is not a very angry God, as he used to say, that God does not say you are now praying now when I've told you to close the account. God is not a wicked God. It's just that most times our emotions sometimes play a trick on us. Before you enter the trade, I think the best thing to do is to pray to your God and say, Lord, I am entering into this trade. Is it going to profit me? If he says yes, go ahead. You go enter the trade. If he says, if you did not hear anything or you feel that you are not sure, then you will just put certain stops. That if I lose $5, I'm out of this market. If I lose this amount, I'm out of this market. And that way, you will grow consistently. Thank you very much.
Thank you so much. I'm grateful. Okay, anyone else? Oh yeah. Let's talk. We say about another class tomorrow. Kingsley Michael, Kingsley Kelechi, do you want to say something?
No, sir. Maybe next time.
So who is talking? Justice Ibrahim. I don't know if Obaka is there. Obaka is not here. Anyone saying anything before we call it a night?
We've had enough today. In fact, it's very overloaded with enough goodies.
All right. Okay.
We call it a day.
So we continue. I think we have class tomorrow morning. All right. Tomorrow is Friday. So we continue tomorrow morning, and I think it will be great also. I know it will be great. I don't even think. I know it will be great also. So please try to make yourself available. Thank you, everybody. Thank you.
And I'm pleased. Everybody should note that tomorrow is non-farm payroll.
Non-farm payroll.
So be careful of how you enter into trade.
How you enter the trade, yeah. Thank you, Mr. Amstel. Let me greet your boys.
They'll be here. Thank you very much, sir.
Yeah,
please,
Mr. Mike.
We are grateful, all of you that helped us today.
Vikram and Shitu.
Mike.
Hello.
Debo, we are so happy.
Oga Michael, I dey hail.
Go and see giveaway their community.
Okay, Justice Ibrahim wants to say something. Yeah, come on. Ibrahim, please. The Abuja man, no, yeah, now. Okay. Yes.
Are you sure he's away? He's raising his
I'm
hand.
actually not sure. Cyprian, how are you doing today? Muyi swag. Muyiwa.
Hello, sir.
Yeah.
Yeah, good evening, sir. Yes, sir.
How are you doing today?
Fine, sir. So please, before you end the class, sir, thanks so much for tonight, sir. I really appreciate the retreat, sir. But I would like you to quickly brush through the meaning of I think is it when Mr. Vikram was talking, he made mention of ID50. I've forgotten that.
Identity
I've
trade.
really forgotten. Identity trade.
Identity
ID50.
trade. Yeah, identity trade 15. That's what they call it.
Okay, what does it mean, sir?
It's just your pullback to the 50 MA.
All right.
That's the name they give it, ID50 trade.
All right. Thank you, sir.
Yeah, you're welcome.
Yes, sir.
All right. Is that all? Obiora, Nobu, Shitu, Ajasa. Okay, all right, guys. Thank you so much. Have a nice night. We'll see you tomorrow morning. I hope you enjoyed the section, dude. Thank you.
Good night. Good night. Our
Good
class
night,
rep is
sir.
not here. Good night. Our class rep is not here to shut the class down. All right.